The Economic Update with Tatiana Bailey.
In today's update, we're talking about overall prices and where they stand right now compared to this time last year.
So right now, Dr. Bailey joins us to break down these numbers with a lack of increasing wages impacting inflation.
Recent data shows that prices in July were up 3.4% compared to a year ago, which is down slightly from June's 3.5%, although still well above the Fed's 2% target. Core inflation, which strips out food and energy, stood at 2.5%. Prices have moderated over the past couple of months, mostly due to falling gasoline prices, although they've edged up in August and are currently $4.30 per gallon. In July, gasoline fell 2.9%, but compared to a year ago, gasoline is up nearly 25%. Given where gas prices have been in August thus far, it's plausible we may see inflation overall take up again when the August data is released. Other components driving inflation include eating out, which continues to get more expensive with a 3.4% increase over the year. Airline fares are up an astounding 26% compared to a year ago. Perhaps more concerning is that wages are not keeping pace. Nominal wages, which don't account for inflation, are up 3.2% over the past year, but with an inflation rate of 3.4%, we end up with inflation-adjusted wages actually down in July, 0.2% compared to a year ago. Wages tend to rise faster when workers can easily move between jobs and employers have to compete for them. Right now, hiring is largely stagnant due to labor shortages, but also businesses are navigating tariffs, higher input costs, and broader economic and political uncertainty. Businesses do not typically hire robustly when their costs are higher and the economic future is ambiguous. Indeed, the labor market has shown some softening over the past 3 months. The economy lost 23,000 jobs in July, and May and June payroll growth was revised downward. The unemployment rate remains at 4.1%, but that low rate masks that the U.S. has a subpar labor participation rate, partially due to retirees and partially due to fewer working-age people who actively work or are looking for work. There will be another jobs report and inflation report before the Federal Reserve meets in mid-September. Given all this data, the case for an interest rate hike in September is now much weaker.